All right, well, that's the global view coming in. Ed Yardeni is President Yardeni Research. He's joining us right now to take some questions. Ed, great to have you with us here on the program. You know, we, of course, have to start with the very super strong jobs data in the U.S. and what that does to Fed pricing, etc. But for equities, what does it mean? Could it actually be a positive? Because, you know, you've got a Fed which will, the next action is going to be cutting. And it's going to happen sometime. The question is when. And sometimes waiting is better than actually getting it. So is that the state that equities find themselves in? Go on.
Yeah, I agree with you. I think that the market has figured out that if the Federal Reserve is under no pressure to lower interest rates anytime soon, that implies that the economy is doing quite well. The Fed doesn't really want to lower interest rates prematurely. Inflation's coming down, but it hasn't exactly right on the money hit their 2% target. At the same time, the economy is showing that real GDP is growing very rapidly. And the other thing that's very exciting is productivity growth has really picked up over the last 3 quarters of 2023. So the Federal Reserve is in a very good shape to do nothing for a while here. And I tell you the truth, I wouldn't mind if interest rates just stay here because the economy is doing well, earnings are coming back, and the stock market decides that that's pretty good environment.
Ed, hi, good morning, and thanks a lot for joining in. So what is the expectation from the Indian market? We have the budget that is now behind us. There's a big election coming up, and the narrative is that the government is, all for fiscal prudence as well as, looking at growth measures alongside.
Right.
How are you feeling about India now for the rest of the calendar year?
Well, the Indian market is discounted at a tremendous amount of good news, and there has been a tremendous amount of good news. And for now, we're seeing that India and other emerging markets that do not produce oil are enjoying a relatively low oil price right now as well. So I think the outlook for India's economy is good. I think it could be very good if we continue to see that the move out of China in terms of production is to the benefit of India. But the market has had a big run, and I wouldn't be surprised if there's some consolidation for a little while.
Ed, good morning. Good to see you. And Ed, how do you expect, emerging market central banks to, to behave in this sort of a backdrop? Because there's uncertainty when the Fed cuts and the quantum as well. We have a central bank, the RBI meets later this week. How do you expect, central banks like ours to behave?
Well, central banks around the world, whether it be in developed countries or emerging countries, do seem to have a certain amount of synchronity in the way that they manage their monetary policy. So I don't think that emerging markets are going to want to rush to lower rates here. Inflation is still a problem in a lot of countries. It's coming down, but it's still a problem. So I wouldn't be surprised if we see sort of a worldwide pause in central banks tightening, and I don't think they're going to be rushing to easing.
All right, we'll leave it at that, Ed. Thanks a lot for joining in. Appreciate your quick thoughts on the market. Well, that's the word coming in the macro economy. Let's do one.